Oh, these pages are taking so long to load. What's going on? All right. Hong Kong now considering spot crypto ETFs for retail investors. Bloomberg. So bang. So Hong Kong is controlled by China. And China's just in a shitstorm, a shitstorm of financial problems right now. And their whales are desperate to be able to put their cash into, assets that make them gains. Most of their whales, we've talked about it here a million times, but if you're new to this channel or this is your first time watching, China has built so much real estate, so many buildings that they have whole cities that are empty. Yeah, just, 20, 30 condos, empty, with like 5 people living in each building. Yes, this is real shit. And so their housing market has crashed and is in the process of still crashing. It's not even over yet. The pain hasn't even been fully realized yet. It's a shit show going on in China. And so if you're a Chinese master, you're a whale, and you're not allowed to move all your money overseas, well, you've got to park it somewhere in China. Well, what are you going to park it in? Chinese stocks aren't doing very well. They're getting crushed too. Well, look at this bright light over here in Hong Kong, and this bright light called crypto. So this is for retail investors. This is not institutional. So this is for retail investors. So soccer moms and dads in China. But I'm going to read to you something right now in a second, another Hong Kong investment vehicle, but this one's for professionals. So what I want to show you is that China is fully opening up to crypto now for the retailers and the institutions. Because remember when China first opened up in June, right? China opened up on June 1st. So did Europe. Europe and China, the EU and China came online with full clarity, regulatory clarity around the crypto markets, June 1st, both of them on the same day. If you go back to my show on June 1st, when I talk about it, right? So, and now we're seeing the investment vehicles being rolled out. Like I told you, you get the regs, yes, but then the lawyers have to figure out, okay, what do the regs mean? How can we build stuff that is compliant within these regulatory standards? And then once then you launch stuff. And so we are beginning to see, and I'm about to read to you right now, this and then another one, the Hong Kong, these guys are starting to roll stuff out for the retailers and the institutions alike. That's what we want, all the money. And those people want to park their money. They need to park it somewhere. They've been thrashed. They are getting thrashed as we speak. Okay, so, and, you understand, let me tell you something about China. You know that 1 in 5 people on Earth are Chinese, right? China has 2.4 billion people. Yeah, that's 1 in 5 people on Earth, right? China and India both have 1 in 5 people on Earth. 20% of the Earth are Chinese, Han Chinese, and 20% of Earth are Indians from India. Yeah. 40% between those two countries. And so that's why, fuck India. India, they're fucking around. They've been fucking around. I'm not even thinking about those jackasses anymore for a while. But China, that's 20% of Earth, is now getting exposure, thanks to this, to the retail investors and what I'm about to read to you for the institutions. So, and these are just the first investment vehicles, right? This is just the beginnings. And so let's check it out. The move comes a month after authorities in the city updated the financial regulations to allow for. So the regulations are made. They are allowing retail investors to buy spot crypto ETFs. And you have to understand, it's crypto ETFs. So not just Bitcoin ETFs, but if you're a fund master, you can make an ETF out of anything over there now because it's legal. You can have a VeChain ETF, a Solana ETF, a Polygon ETF, anything, or a combination of both, a combination of a whole bunch. You can have, Solana, Ethereum, and Polygon all in one fund. Yeah, you're allowed now, right? And that's what I'm talking about. And those are the investment vehicles we're really waiting for. Most of any market is the funds, right? Guys who just buy the asset, put it in a basket, and sell that to people. Okay, that's what your market is, right? All the sexy stuff, that's a tiny percentage of your market. The daily up and down, down up 100, down 100, up 500, down 500. That's just a tiny little slice of your market. That's minuscule compared to the funds like your 401k. All right, I've explained that before, so let's check it out. Hong Kong securities regulator, the Securities and Futures Commission, is moving toward allowing retail investors to buy spot crypto exchange traded funds. And the beauty about this is that these are spot funds, meaning the guys who are going to make these ETFs have to buy the crypto and take them off the market, right? That's what spot market is. They have to buy it, take it off the market, and warehouse it for their fund, right? Thus creating scarcity, thus making the prices go up, right? A futures contract ETF, well, it's an ETF, but just with futures contracts in it, right? It's not doing anything to the market, right? Because a futures contract is just a contract that moves based on the underlying asset, but you're not actually buying that asset, right? Or spot, you have to buy that asset and put it in the fund, all right? So that's what makes, when you hear of ETFs, you want to hear the word spot market ETF. That's what you want to hear. Futures contract ETF. I mean, it'll make you money. It makes, the Moscow's money, but that doesn't make us any money. That doesn't help us, right? Creating scarcity or anything. Okay, so those are the differences between spot market ETFs and then futures contract ETFs. Spot is what we want to hear. And again, Hong Kong being part of China, 2.4 billion people, well, you can see where this is going, can't you? All right. So look, we welcome proposals using innovative technology that boosts efficiency and customer experience. SFC Chief Executive Officer Julia Lung is quoted by Bloomberg as saying, "We're happy to give it a try as long as new risks are addressed. Our approach is consistent regardless of the asset." So they're saying, all right, we're going to let it rip. If these miscreants fuck around, we'll shut it down, basically. All right. Hong Kong regulators are continuing to take a progressive approach to crypto, and their opinion on retail exposure to digital assets has shifted throughout the year. Exactly, because you have to remember, before June of this year, people were wondering if crypto was banned in China. And then Xi Jinping was like, look, no, we're going to open it up. Not in mainland China, but in Hong Kong. But it doesn't matter because Hong Kong is still a part of China. So that means every retailer, every institution in China will have access to these investment vehicles that I'm going to read to you today. So in January, the SFC tightened regulations by restricting retail investors from accessing crypto spot ETFs, limiting them to the professional investors with portfolios of at least $1 million American dollars. Then in October, the SFC updated its rule book to allow a broader range of investors to engage in spot crypto and ETF investing, stipulating that they pass a knowledge test and meet net worth, though less than the professional investors' threshold requirements. Holy. So you got to pass a knowledge test. They make you take a test to invest in this stuff. Yeah, to make sure you're not an idiot. So, which they should do here in America. I tell you right now, I'm doing this crypto stuff. Man, I've led a lot of idiots that I can't believe they're the guys handling their family's finances, daggone. Anyways, though, the policy is updated in light of the latest market developments and inquiries from the industry seeking to further expand retail access through intermediaries and to allow investors to directly deposit and withdraw virtual assets to and from intermediaries with appropriate safeguards in a regulated fashion. So, issuer of listed crypto products would need to publish risk disclosure statements. Bang! As every fund does. So, there's a little more. Okay, so this person here says, or Lung says, as the crypto ecosystem evolves step by step to the point where we're comfortable, then we're happy to open up more access to the wider investing public. Bang! So that's how China's going to roll. They're going to take safeguards, China's not just going to let their people get rugged and all kind of weird stuff. Trust me. You'll get disappeared if you rug people out of China. But this is what we want to see. This is what we want to see. And you heard her in her voice. She says, yeah, we're going to try it out. And as long as things are compliant and they're working good, yeah, we're going to open it all up. We're going to open up the whole fucking thing. Right? And that's what you want. 2.4 billion potential people. And obviously, not every single person is going to buy crypto. Probably just a fraction. But even if just 10% of those people, that's 200 million people. Right? If only 10% of China ever invests in crypto, that's 200 million people. Right? America, we're 330 million people. So that's imagine more than half of America all in crypto. So there you go. So that's what we want to see. That's what we want to see. That's what we love. Bang! Now let's get on to this one. Bang!